Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's daily market update. Starting off with the US, and the dollar index extended its losses to make it 2 out of 2 for the week. The weakness overnight came on the back of trade balance figures, which showed a 13% jump in the trade deficit for the third quarter. The figures were only preliminary and did not include services, but the result has some economists cutting as much as 1 percentage point off their estimates of GDP growth. Also in the US, a consumer confidence report came in strongly, which limited the US dollar's downside for the day. The CB consumer confidence figure returned 103.0 versus a fall of 96.9 expected. The result shows the effect of the strong labour market is having on the consumer sector. And be sure to keep an eye on the Fed early tomorrow, with Federal Reserve Chairwoman Janet Yellen due to speak. With any luck, we'll get some clarity around interest rates, but the likelihood is she'll reiterate her stance that a rate rise is still possible in 2015. Turning now to the yen, and it's traded slightly weaker in the Asian session today. The Bank of Japan released their household inflation expectations report, which showed that the bank's monetary policy has strengthened the anchor of inflation expectations as a whole. Today's weakness in the yen comes from disappointing industrial production and retail sales figures, both of which missed their estimates. Industrial production fell by negative 0.5% month on month, well below the expected plus 1%. And finally today, our analyst pick is the Australian dollar. The Aussie has seen some weakness recently as commodity currencies come under pressure. It has found support, however, which has resulted in a double bottom forming that could signal a temporary rebound. We'll be looking for a break above the neckline before we go long. And that's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.